Joining us now for a closer look, what is playing itself out in that market scene is Nick Kunze from Sanlam Private Wealth. Nick, a pleasure. Good afternoon.
Good afternoon.
All right, you would have heard in my intro, Nick, I said September is often a tough one for markets. So far, the thesis is proving to be very real. I'm keen to get your thoughts on this one.
Yeah, traditionally that's right. I mean, people often think of October as being the month of crashes, which it has been. But if you look at consistently over the last couple of decades, September actually sort of gives the worst returns on record, and a number of reasons for that. It's the fact that people are coming out of the summer lull, we're heading into an earnings season, heading into the last quarter, and it tends to be a little bit subdued. So yeah, we're all prepping ourselves, although it must be said, not as bad as that first week in August that we've seemed to have bounced back quite nicely from.
Also very interesting, Nick, that we're seeing here is just PMIs emerging weaker than anticipated. China out yesterday. We were out yesterday. I think Eurozone later today. I'm concerned about what it tells us about the global economy at large, and I'm wondering if markets are also trying to take stock of that performance as well.
No, I think they are. I think, the PMIs are always quite a good indicator. They're far more up to date than the other ones, which are a bit more lagging. And as those PMIs are coming in at 50, slightly under, the unofficial PMI rate in China coming in, showing almost heading into contraction once again. So there's clearly a theme here globally that, that the world is starting to slow. The global economies are starting to tick down. And I guess that does tie in exactly with what we're seeing with interest rate projections that, most forecasters think the Fed will definitely cut in the next couple of weeks. Our South African Reserve Bank probably pretty close behind as well. And in general, we are starting to see a cut in rates to certainly try and stem what is being a slowing global economy.
Also, couldn't help but notice that the rand is weakened quite a bit, closer to 18 than what I would like. Wondering what markets could be contending with there.
Yeah, it seems a bit strange the last couple of weeks. At one point looked like it was going to break 17, but how quickly things change. This is not just a rand story. This is very much a dollar story. In fact, last week the rand was one of the few sort of crosses that were firmer against the dollar, even when the dollar was certainly strong against all the other crosses. So a little bit coming back. It's had a bit of a run. The dollar was looking like it was going to break sort of parity on that Dixie. It looked like it was going to break 100. It's back at closer to 102 now on the dollar index. So the dollar coming back. And again, I just get the feeling, holiday in the US yesterday as well, Labor Day. So things are a little bit quiet. And I think there might be a little bit of positioning ahead of the non-farm payrolls, which are due on Friday this week. That is the big data point for us. That'll definitely move the direction of the currency.
Keen to end some company news with you as well. Nick, quite a bit going on. Maybe starting off with Motus. They've come out and really reported on the challenging economic environment that we've seen here. We've seen vehicle sales, continue to deteriorate, and quite evident here. Still declaring a dividend, though. I'm wondering if markets would at least cheer that on.
Yeah, I think they will cheer it on, but I mean, it tying into a consumer in South Africa that's a little bit under pressure. We're all desperately waiting for interest rate cuts. Motus, combined motor holdings, a few of the other consumer cyclicals have really illustrated that we have a consumer that's under pressure. So, needless to say, free cash flow was still decent, so hence the dividend payment, which is pretty good. But nevertheless, that business does remain a little bit under pressure with the consumer.
Another interesting one, Shoprite. Maybe that story twofold. The first, looking at their performance, Nick, I always say that Shoprite is so far gone. I'm not sure another retailer can actually catch up at this time. And I think evident also in this performance, as many retailers and even food producers have reported a squeeze, Shoprite continues to thrive.
It does, though. If you look at the share price, it's getting a little bit back today, and I think more than a lot to do with that. The rise 7.2% increase in EPS is slightly light. We're looking for 7.5. So, but also bear in mind, I mean, this stock was effectively doubled in the last few years and well north of 300. It's back around about 299 before I came on the show. So getting a little bit back, and also for investors out there, the stock is not exactly cheap right now compared to its peer group. But again, as you pointed out, it is a best of breed. The margins are 3-4% compared to the others around about the 1s and 2s. So definitely one of the better operators, but they're not immune to certainly a slowdown in the consumer as well.
And then the other part of the story, of course, is that disposal to Pepkor. And of course, I think Pepkor looks like it continues in its usual furniture kind of business here. For Shoprite, though, to offload this, Nick, what do we make of that?
I wouldn't read too much into it. It's not a big number. It's more surprising the fact that Pepkor are getting more into furniture. So that is the more surprise for us. But yeah, I wouldn't read too much. It's quite small on the grand scheme of things for a disposal of Shoprite size.
An interesting one that came in, I think, very late yesterday. Takealot selling off Superbalist. Now, of course, these are not companies that are quite listed on their own. They are part of the Naspers group. But for me, I thought it maybe could have been a Shein and Temu story there with Takealot maybe believing that it's not worth it to keep this asset. I'm wondering what you're making of this disposal.
Yeah, I think there's some truth in that. Definitely are battling to compete. Of course, we've seen Amazon coming to our shores a few months ago as well. So competition hotting up for consumers on the online space in South Africa. Yeah, I think there might be a little bit of truth in that, and non-core assets have been disposed. But they did sort of highlight that recently, so there wasn't any surprises from our side.
Another interesting one that I think is emerging at this time is what we might be seeing with our resources cycle here. They're just not getting any luck. I'm wondering, as we see interest rates possibly come down this month, Nick, can we expect some sort of a recovery in some resources counters? It may not be the PGMs, it could be something else.
Yeah, so I mean, if the last couple of months we've seen a little bit of M&A activity, obviously with BHP Billiton and the likes of Anglo American, and they gave a little bit of bid to the market. It has been sort of suppressed for a while, but the problem is when you're in that mining space, it is difficult when you've got someone like China, the world's second biggest economy, and ultimately the consumer of everything that comes out the ground. We've seen that iron ore prices have been under pressure. It was down about 4% today. Also, steel prices down. So in general, that's slowing Chinese economy. And you mentioned in the intro as well, China with the delegation of South Africa over there now, it's our biggest trading partner. We really need China to continue to grow, and the world needs China to continue to grow from a resource point of view. We're not seeing that yet. The numbers have been coming out have been quite sort of depressed from a demand point of view. So until that changes, I'm afraid we're not quite there yet, although we might be nearing a bottom. Implats up about 7% yesterday, a little bit of sort of a profit, a little bit of bottom picking happening, but I don't think we're out the waters just yet.
Well, Nick, I'd like to get into some stock picks now, but first let's look at counters that have found favor with industry peers.
I'm going with ASML. We were talking about NVIDIA earlier, but ASML sits right at the top of the supply chain for semiconductors, and they are basically a monopoly.
I'm going for the S&P 500. Okay. I'm going to have simply, and I'll tell you the reasoning is that I think we're going into very strong couple of months now as rates start to come down and confidence starts to pick up in the US. I still think we're going to end the year a lot better than we are at the moment. That's a simple choice.
Novo Nordisk, which is, they're in the diabetics and almost weight loss kind of GLP-1 drug category. So they make the likes of Ozempic and Wegovy. And so I mean the stats that come out of it, there's 1 in 8 adults in the US use a GLP-1 drug like Ozempic. They've used it, when I said use, they've used it at some point in their life. And there's a good retention of using it as well. But the big one here is that 40% of Americans are technically obese based on their BMI levels. So there's a big culture there with fast food and all of that. And this is such an interesting space because it's one where if medical aids take this on, if you've got these US Americans or individuals around the world who are actually dropping weight, the other benefits you'll get, it's lower heart rates, heart attacks, lower stroke, there's so many other benefits from actually just being leaner, that if medical aids pick up on this and they're willing to almost fund it, I think we're going to be in a very interesting space.
All right, Nick, keen to get your thoughts on some of those, ASML, Novo Nordisk, and the S&P 500.
So going through each one, I mean, S&P 500, I differ slightly with David. I think the S&P is looking pretty expensive on a relative point of view and historically, so I'd be cautious just buying an S&P 500 ETF, but obviously it depends on your time frame. But in the near term, I'd be a little bit cautious. On the Novo Nordisk, we tend to pivot more towards Eli Lilly, both operate in a very similar space. but the weight loss drugs that are coming out of Eli Lilly, I think, have got more room to run than Novo Nordisk, which leaves us with ASML from Amsterdam, which I like that story. They make you talk about buying the picks and shovels for the gold miners. Well, they make the photolithography, which is the machines that are needed to use light to make the silicone chips. So they are one of the only few in town. They spoke about a monopoly. They pretty much are. Every single chip producer, whether it be TSML or whether it be the likes of NVIDIA, whoever uses them, will use their machines to make the chips. So they are expensive, trading at over 40 times earnings, but there's no other choice right now. And I think if you believe in that AI story, then I would second that ASML is one you've got to have in your portfolio.
And with that said, Nick, which counter are you labbing today?
So leaning more towards the SA Inc. story, and in that particular space, the financials, we saw the GDP number come out about, give or take, 45 minutes ago. It wasn't quite what we're looking for. We're looking for 0.5%, came in 0.4%, but nevertheless, South Africa is starting to turn around. And if you like the turnaround story in South Africa, you've got to own a financial. And for that reason, Standard Bank, even though sitting at multi-year highs, don't forget we have pretty much gone nowhere for 10 years. And you've got to buy into that financial sort of bounce back story. So Standard Bank would be the one we go with.
Brilliant, Nick. Thank you so much for being with us today. An absolute pleasure having you on Business Lunch. So that was your midday markets update with Sanlam's Nick Kunze.